Everybody, morning. How's it going? Oh, I have to put my monster up there. There we go. Got the monster. Oh, yeah. Welcome back to the show, everybody. And this stuff cuts right through the market noise. And healthy dose of caffeine, sarcasm. Welcome to the show. Today, we're going to dive headfirst into the good old AI rush, a story of big money, bigger egos, and a company called Nvidia, basically printing money by funding other companies at this point, I guess. Now, we've all heard of Nvidia, right? I mean, they make those fancy graphics cards your kids, grandkids use to play video games and build the. I mean, crypto miners used to use them, but now they're the AI revolution. And whatever it is that they can do, will do, everybody seems to love them, right? But lately, Nvidia has become the undisputed king of the AI world because their chips are the picks and the shovels of this digital gold rush for AI. And they make now you can make cute cat videos with a few text words. And everybody from your grandma to your dog is trying to get AI powered something to make their life better. And that brings us to the story of the day. It's a classic tale of big, rich company, Nvidia, and a smaller, scrappy upstart, CoreWeave. I mean, think about David and Goliath here. If Goliath was also David's sugar daddy, though, this is kind of the story we've got going here. So CoreWeave is a company that builds and operates, let's just say, AI factories. Now, these aren't your granddaddy's factories with smokestacks and assembly lines. These are massive data centers packed to the gills with Nvidia's most powerful chips, all humming away, training and processing these AI models that are going to take over the world, or at least that's maybe just write some of our emails. And here's where it gets interesting right now. Nvidia just announced they're going to plow another $2 billion into CoreWeave. Now, say yesterday. That's on top of the previous deal where Nvidia was going to buy over $6 billion in services from them. So Nvidia is giving CoreWeave a giant pile of cash, and CoreWeave is turning around and using that cash to buy Nvidia GPUs and chips. I mean, it's a glorious circular story of investment. Beautiful, self-sustaining ecosystem. It's like if you gave your kid or maybe your grandkid a $20 bill to open a lemonade stand, and then you bought all the lemonade. Who was the real winner here? I mean, the kid with sticky fingers or you with a pitcher of lukewarm sugar water? Now, some people, the haters, if you will, are calling this a circular deal, a circle jerk. Even, quote, the ever so subtle financial blogger at Zero Hedge, they're worried that this is all just a house of cards, a way for Nvidia to keep inflating its own sales numbers and create the illusion that this thing is going to the moon. It just keeps going higher. It's they're worried. They're worried. And you know what? They might have a point. It kind of is a circular investment. But then you have Nvidia's CEO, the leather jacket wearing rock star of the tech world, Jensen Huang. And what does he have to say about all this? He says, well, that's a ridiculous notion. He says, Nvidia's investment is just a small vote of confidence in these generational production companies. A drop in the bucket compared to the trillions of dollars that are about to be spent on AI infrastructure. And, well, he's not wrong. The numbers are quite staggering here. We're talking about a 2.5 trillion with a T AI market cap by 2026. or AI investment, I guess, market cap. You know, it's a shortage of pretty much everything, from memory chips to power to the very land that data centers need to be built on, to the copper, to fiber optics. I mean, Owens Corning's even taken off on a new deal about fiber optics. It's a full-blown arms race here. Nvidia is the only one that really is a contender for the general purpose picks and shovels that can do anything. Now, we have Google coming up with their own tensor chips, but they're not just good for any kind of AI research. There's a specific, sector they've gone after. So what does this really all mean for us, the savvy traders? We have healthy skepticism for corporate spin. So let's break down the investment opportunities, shall we? I mean, you have the obvious play, Nvidia. They're the king of the castle, the top dog. You get the picture. But they're also trading at a nose-bleeding valuation right now. And if you've been paying attention, their stock hasn't really gone anywhere for a while. I mean, it's kind of like buying a Super Bowl ticket on game day. You're in the stadium, but you sure did pay a fortune and probably got a crap seat. Then you have the up-and-comers, the picks and shovels of the AI gold rush that aren't Nvidia. I mean, you got companies like CoreWeave, which are, out there. And you've got a competitor to that, Nebius, NBIS, which it's public, it's out there, seen some insane growth. These are the companies that are building the infrastructure. They're actually building the factories where people need to run these models, run the things they're building. But be warned, they're also deeply unprofitable, which is a nice way of saying they're just burning cash like a drunken sailor on shore leave. And finally, you have another kind of play. The companies that supply data centers. Think about Equinix and Iron Mountain, the real estate lords of the digital world, or Vertiv. That's, to give you tickers, that's Echo, Quebec, India, X-Ray, Equinix. Iron Mountain is India, Romeo, Mike, IRM. And Vertiv is Victor, Romeo, Tango, VRT, which, Vertiv provides cooling systems that keep these AI factories from just melting into a pile of silicon goo. It's boring kind of stuff, but it's potentially profitable. And then you have Corning, providing fiber optics. You've got, all sorts of energy plays that you could go after. Nuclear is supposedly up and coming, but it takes a while to build nuclear plants. And funny enough, during this cold snap the last few days, coal and natural gas are what kind of saved the electrical grid from all melting down. Is that the stopgap measure? Is that the stopgap way that we're going to solve the power shortage in the short term while nuclear actually gets some legs under it? Different ways to play, different ideas. I mean, natural gas has been on an absolute tear, but seasonally, by March and April, we should be making a low again. So that's kind of the Nvidia CoreWeave deal in a nutshell. It's brilliant in some ways. Strategic assets. Is it the future of AI, or is it just a cyclical, self-serving scheme to prop up the bubble and keep the numbers good? The truth, probably somewhere in the middle. Maybe it's intentional, maybe it's not. But one thing's for sure, the AI revolution is still going on. It's the worst it's ever going to be. So do your own research for the love of all that's holy. Be careful out there. Stuff, it's not going away. So get your piece. That's all we have for today on the monologue. stay caffeinated, stay skeptical. Let's check some charts, make some predictions, and by the very end, I'll kind of read the tea leaves of the gamma market and try to give you an expectation for where I expect QQQ and SPY to hang out today. So all trading involves a substantial risk of loss, and past performance is not necessarily indicative of future results. This presentation is intended to be informational, educational, fun, entertaining. Hopefully you're entertained. Not a recommendation to be buying or selling any financial instrument. Sometimes I get lucky. Anybody check that UNH chart lately? Somebody just posted it in Discord, and it's pretty wild there. So if you need somebody to tell you what to do, you can hire and consult somebody. But be careful when you trade stocks, options, bonds, forex, futures, cryptos, treasuries. You might lose money. In fact, I think the statistics say 95% of people that trade lose money. So be careful out there. Definitely lose your money. Or you can do something like this. Follow somebody that consistently makes some money. $57,000 all time. Year to date, 658. Here in the last year, I started this, refunded this account tax day last year. The all-time history here, I never had much money in it. I didn't like the way the platform worked, so I never traded there much. It was hard to place a trade, but so I left it for dead for a while. 5 years later, come back, I'm like, oh, they changed a bunch of stuff. They fixed a bunch of stuff. They made it easier to use. So I put some money there and decided to build an account that can make $50,000 a month in profits. Now, looking at the 1 month, and we're not at 50,000 yet. We're at 7,500. So I got a ways to go yet. And I did take a little bit of loser there last week. Got full of my britches. Thought I could make spaghetti stick to the wall and touch the hot stove and burn my hand a little bit. But in the grand scheme of things, that little pullback is nothing. I've already made half of it back. 29, 27, made half of it back already. And back on the train, just small little gains, repeatable every day. That's the plan. So anyway, that's how you build an account. Small, repeatable gains booked pretty much every day. So looking at the charts, how do we make money today? Oh yeah, we've got a big event coming up tomorrow, in case anybody didn't know. And I'm not talking about Tesla earnings, although that is a big event in itself. I'm talking about the FOMC meeting that we've got cooking tomorrow at 2 p.m. Interestingly enough, somebody bet, I don't know if it was Kalshi or Polymarket. Somebody bet, open a brand new account and bet $6,000 that they were going to do a rate increase yesterday. And if that plays out, they win like $5 million. I thought that was crazy. But unlikely to pay out. I don't think they're raising rates. I don't think they're cutting rates. I think we're going to hold rates steady based on the DGS2 chart here. It's 2-year constant maturity rate. The Fed usually chases this rate. As you can see, they chased it up, crossed over, and they've been chasing that back down. Now, anytime that the Fed gets above the market rate, at least in my 3 decades of trading, every time this kind of happens, it leads to some sort of financial crisis. We had that back here in the early 2000s, dot-com crisis. We had that right here, housing crisis, great financial crisis, whichever one you want to call it. Had it right here, which led to the COVID crisis. Interestingly enough, it was in the charts before, everybody wonders how I saw it in the charts. It was in the charts before it actually caused a global shutdown. Weird enough, oddly enough, whatever you want to say. So this one right here, also some sort of panic, some sort of interesting thing. Now, I was reading an analysis last night that said, look at the number of extremely large IPOs set to kick off in the first half of this year. Got SpaceX, we got Anthropic, we've got OpenAI, we got all these massive, Databricks, all these massive potential IPOs set to kick off right here, the first half of this year. They have a 6-month lockup, right? You go public, you got to hold your money for 6 months before you can liquidate. That's kind of the rules of the game. And then you can start selling. Are all these very smart people trying to get their money back out of the system at the peak before something happens, and then they can deploy that cash that they made over here back at the bottom? Interesting, right? Another idea. Just an interesting, another theory out there. Conspiracy or just part of the cycle. I mean, we saw that happen here for sure. Lots of money flowed into all sorts of .com ideas, went public. Valuations went screaming higher. And then we hit the floor. So be careful out there. Nvidia just keeps churning in there. Nvidia. But UNH, look at this. Circling back, put my fingers on the right keys. UNH. Oh, look at that, right down at the target. I'll be hornswoggled. Can't believe it. Got another one right. Holy pistachios. Let's see. Somebody posted this morning. I think Susan posted it this morning. Pop this out. Anybody remember me doing this? Look at that right there. Boom. Right there she is, right down to the target. Amazing. Anybody that got a piece of that, congratulations. Now we're looking for this to hold right here and turn higher. This freaking out on, what's the story here? None other than President Trump announcing that he's going to put the kibosh on any kind of Medicaid increases this year or something like that. Medicaid, Medicare, whatever, whichever one it is. I don't know. Good, bad, ugly. This chart needed that 3-wave retrace. That's kind of the perfect place for it to bounce. And it sets us up for a major rally. So this should be putting pressure on the Dow Jones Industrial Average. And a little down pressure today. Not much, but a little bit. UNH is like one of the biggest components here. Doesn't matter. I don't know. ES, jumping back over to S&P 500, breaking out, cruised right through those targets, set up for 70.68. So moved on up here. Might need a little bit of retrace, but probably set the stage for new highs. This correction might be over now with this move back through this downtrend of highs. So, and then NASDAQ telling the same story. Potential to move on up to 26. And then the bigger kind of correction we had going here. Let's see, remove that, draw this high right here, this low right here. I mean, we haven't made a new high since back here. Yep, there's UNH touching 287. That was the alert I set. We haven't made a new high since back before Halloween on NASDAQ. Even though it seems like big tech's been ripping, it has not. We're trying to break a new high here. We've found resistance here for the whole time we've been consolidating. So if we can actually break high here, break higher here, target right up in here. 26.7, 27.1, and that's on NASDAQ, the futures. NASDAQ cash, a little bit different, running a little bit behind the futures, but similar levels here. 26.5, 26.8, 50 on the upside there. So we did poke through this little mini downtrend of highs yesterday. We need to get some continuation. Go back up, bust through that prior high back there in October, and go cruising on up. Can we stick it? We'll see. And S&P cash index. Let's turn off the Apollo algorithm. Yeah, that did a 3-way retrace, 2 at 618, set for cruising on higher. Next upside, 7,031. We tagged that. This one did make new highs, whereas NASDAQ did not make new highs. So we've seen that S&P 500 outperforming. Then we've got the Russell that also made, hit big upside targets. Jumping up to the daily chart here. Almost retraced back down to the 1.1448 where we topped out back here. And that could be enough to take us on up to this level, 3,100. So looks like the top. Going to keep rallying here. Oil in an interesting situation as the dollar plummets down, puts upward pressure on gold, oil, natural gas, other commodities. But Bitcoin and Ethereum don't seem to be riding along. But oil, if we can break higher here, we have the long-term downtrend of highs going since 2023. If we break through that, probably cruising on up to like 100 for the test. That's going to be inflation skyrocketing. It's quite literally skyrocketing. We're talking about 80% higher oil prices. And we saw OPEC coming out yesterday saying the supply abundance of oil is overblown. Stories about supply abundance is overblown. They actually see supply shortages, so this could spike this thing out. Gold sitting at the highs up here. Silver took a big bath yesterday. Coming back up a little bit today. That move was crazy, and then it took a big step back late in the day. It's interesting how it doesn't show up quite in the daily chart. Look at that move. Went from all the way up here, all the way down here in a mere 8 hours. 13% pullback. Now, this lower high right here, I caution all the time about this. Sitting right at the 618 on this bounce. Next move down puts us right back here below 100. That was already down to 102 on the initial drop. So it's not that crazy, but be careful. And that could be all the correction we need before we go higher again. 120 is still the next. Well, we came up right at it, but 120 is kind of the next upside. Jump up to a 3-day, 121, something like that. 120, 121, 118, somewhere in there in the neighborhood. The next upside. Bitcoin. Well, I put on a short on Friday. It was a bear debit spread with puts on IBIT right here on Friday. And I think we're going to plummet out the price action. We broke down this uptrend of lows that we've been churning on since back here at Thanksgiving. We broke down below it. That gives us a short-term opportunity for a spike down here in the 70s. Then we'll probably spend a few months rallying back in a consolidation. This kind of confirms that we have a downtrend in place. We'll probably see, it doesn't have to happen this way, but it's just likely that we see this three-wave correction back up into this 100 to 115 zone after we make this lower low that we made back here at Thanksgiving. And at that point, that's where if you want to liquidate something, you should. You know, this may be, it may go quicker. It may be May or June when we get up here, because we're likely to take a big swift trip down lower than this low after we make this, after we hit that level. Just the way it is. Ethereum also broke down below the uptrend of lows and looking for a low lower than Thanksgiving. Probably confirming, both of those probably confirming crypto winter for the next several months, where we're going to make lower prices for a little bit. Probably wrap that up somewhere around October. Let's put a, I guess somewhere around here, we should be wrapped up on this correction. And it might dip down in the 40s, possibly even the 30s before we wrap that up. So be careful out there on crypto. Despite all the bullish potential happenings, the 4-year cycle is just kind of intact. You've got long-term whales that are playing the 4-year cycle. So NKD looks like we could take a spill down here. That's global liquidity indicator. If we take a spill down there, it's going to suck down other markets with it. Dollar keeps chugging here. As we keep chugging, oh man, we're so close to the lower low. Golly. I wasn't even sure this was going to happen, but look at that. Beautiful move. So this is, so far, 1, 2, working on the 3. Then we'll probably get a bounce. Should hold below that 1 for a 4. And then we'll make a final move. 5. Now, 4 could be kind of slow. Probably take twice as long as this move here, if not 3 times as long. So we got some stuff to work through on the dollar. Man, that's just amazing, that move right there. Let's kind of clean it up a little bit, see where we're... I mentioned all the way back, I don't remember, when we broke below 98.5, that we were probably going to make a lower low. So if anybody traded this, congratulations. Ding, ding, ding. You win. That move down, that retrace. Yeah, we're probably gunning for this level right here. 95.46. Bounce up a little bit and then flush on down. That's probably what we're looking at on the dollar. Apple bounced off the roadmap line. If we can stick above 270, looking for a 295 on the upside. Amazon, looking for this to get back up through this prior high, 265. This is a long-term bullish signal. We kicked it off back here. 265 is the target. Google, just grinding in here. If we can break higher, 385 would be the next upside. If NASDAQ is actually going to take off. Meta, trying to get through that roadmap line right there. If we can take off, 1100 to 1300 is the target. And we've got, there's the initial, there's the confirmation. We break higher than this. That's another confirmation. Break higher, I mean, the 618 should be right about the same place. Let's see, draw it on there. Yep, right about the same place. Look at that, beautiful. So we rejected the first attempt. Got the 618 retrace here. Come back up through. That's a confirmation, kind of a double confirmation that we're going to go higher. May find some resistance up here in the 800s, consolidate and keep going. 1100, 1300 long-term targets. That could be fast, could be slow, could take a couple years to get there. Microsoft coming back up pretty swiftly. Like this could be it. Like that could be close enough. That could have been done. My ideal target range just a little bit lower, but that might have been done right there. Come back up. If we break higher than this downtrend of highs right here, we don't just turn down. We don't do that. We break out. 618 sitting right around probably 515 maybe. 508. So if we break through that, 574, 591 would be the next upside targets up here. Got to get through this though. Got to get through this too. Nvidia sitting in here, consolidating lower highs, higher lows. Microsoft just did this and took a spill, so be careful. Nvidia could go retest that 150 zone. We made these highs from back here in, like 24, December 24, January 25, a year ago. Retest the breakout. Hold that, then we can go higher again. Tesla, as I mentioned, we'll probably just wait for earnings. We're just grinding in here. Grinding. Earnings coming up. Tomorrow. Earnings coming up tomorrow. No, I'll talk about it tomorrow morning, but more than 70% of the time, Tesla drops on earnings. But that leaves 30% of the time-ish that we pop. And the pops are bigger than the drops. Drops usually down like 13% or so over a few days, a couple weeks. The pops tend to be giant, like 60, 70% higher. So if they got something up their sleeve, we'll see what's cooking. Netflix still trying to confirm that the bottom has been made here. I don't know. If this holds, roadmap line is resistance. If this doesn't hold, probably coming down to the 60 area. So I go pull gainers and put them on the gainers list. I go pull decliners, put them on the decliners list. Gainers are things moving $2 more up in the pre-market. Boom. HCA. Net. Ooh, if that gets above the 226, 273 upside there. Korea. I mentioned that this would be a potential way to take advantage of the memory shortage right here. Find some of this. AGQ. Silver. Let's get some volatility. Remember, a 50% pullback in, this is leveraged silver right here. Be careful. 50% pullback in silver, which is not too crazy, can make this go to 0. That'd be 100% when you multiply it by 2. 100% pullback goes from whatever price this is to 0. So be careful. MU still being crazy, hitting that 415 target. Man, that thing just being a monster. MUU, leverage way to play, and that's getting to be crazy too. Remember, MU takes a step back. This thing can go to 0. Be careful on the leverage plays. Like, know when to get out. Like, it's getting a little rich. Just a reminder here. TSLL on Tesla's last rip. We went from a low price down in here to a high price up here. Up like a crazy 700%. And then Tesla took a pause. Little step back. And this thing took almost the entire move back. So these leverage tickers will fleece you. SPXL. Look at that pullback. Just from April last year, Liberation Day. This thing went higher, went higher, went higher, went higher. Took almost the entire move back. SOXL. Same kind of thing. Look, this hadn't even though we got semiconductors breaking higher, new all-time highs, this thing's not making new highs yet. So be careful on these leverage tickers. Connell. We just have a little pullback on Coinbase, but this thing has taken almost the entire move back from the prior low. There's Coinbase, way higher than the prior low. But Connell, losing it, man. BitX, Bitcoin getting punched in the face with leverage. Ethereum, look at that big run up and then big retrace with leveraged Ethereum. So be careful on these leverage tickers. Know when to book them, know when to get out. INTW, look at that one. You know, Intel went on a rip, and now leveraged Intel coming back to hunt the roadmap line pretty viciously. Light, probably going to retrace back to the roadmap line. Looking for opportunity here. DOCN. Wow. Funny enough, I run a bunch of my stuff on DigitalOcean. Bunch of these automated algorithms I have run on DigitalOcean. If we can break through the 63 area, we possibly could come back to the highs, and then 172 up there. CRM. Watch out for that to hit the target. STX. Yeah, it just keeps ripping. There's Corning on that new deal with fiber optic deal with Meta. Gonna expand their capacity. Zscaler not looking too good right now. If we can hold onto that low that we just made, potential to go higher again, but that chart a little bit on the overlapping side. That's 3 waves up, and if we break down here, watch out for the bottom. TSM, their CEO saying that you should not buy puts or trade against us. Don't bet against us. That chart's pretty ridiculous. We may need a step back before we can go higher. RTX, and that one needs a step back. TR needs a step back. We're getting some sky-high valuations, everybody. It's starting to worry me. Western Digital breaking above the high I put up there, the target I put up there. Man, Amazon's going to take a step back at some point. AMAT going to take another step back. That hit the targets, going on up for 401. Looks like AVGO. So this one potentially finished up, or is finishing up. We made the lower low. This is one of those things that I talked about on Market Masters with Jack, that we needed to make that lower low, and that could be it. Now, there's no guarantees. It could come on down here to the ideal target. Ideal, doesn't have to. Like this, the fact it made a low lower than the low we made right back here in December, that could be it. If we come up here, break through this 618, sets the upside target up there around 428. Maybe a little higher, because this needs to come down to that low at 429. LRCX, watch out for the retrace here. Go on a little bit parabolic. Baidu. So I saw China as one of the big opportunities this year. I have some yen, which hasn't gotten off the floor yet. Looking for this to pop. I just have shares of this, not any kind of options play. NVIS, look for that too. Breakthrough 112, 156 upside. NTLA. Nice potential reversal cooking here. There's the low, there's the high. Went a little deep for my liking. Has the potential to come up here. And then we'll see if we can bust on through that. We could go higher, but if we don't, we turn down, trend is down, correction, continuation, be lower. SGDM, spot gold miners going crazy. GM, look at that. 86, hadn't tagged it yet, $2 shy. Ukta, doesn't look like we're doing anything there. How about Oklo? Not doing anything there either. FUUTU. This did kick off the upside. Doing a secondary bounce. Similar to what Amazon did. 210 is the upside target here. GGLL. Google 2x bull. If Google's going higher, that one should rip. Affirm. Man, grinding it out here. No confirmation that that low is done. Watch out on that one. Lint. 2x bull on Intel. Getting punched in the face. Shiny. SYY. Cisco. The other Cisco. You got the internet router Cisco. And then you've got the food Cisco. Food Cisco. Not really doing much here. No trend for 6 years at least. Yeah. Whole bunch of nothing. Man, that thing was on a tear right up until COVID and then just nothing. Hit the wall. If we ever break out of this consolidation, probably going higher, but yeah, doesn't look like we're doing it today. ANET. There we go. Confirming 173 target on ANET. Amphenol going higher. Dang, man. That needs a retrace. That's getting ridiculous. That's connectors for our digitally connected robot world. Rocket Lab. Yeah, that went crazy. Watch out for this to come back down. Now, it could come on up to 112, but probably going to come back to the roadmap line. Give another opportunity. Biggest decliners like UNH. Boom, right to the target. Oh, beautiful. So if this can hold, take advantage of the next upside. We needed to break through. Let's see. Let me just update this a little bit. We did the pullback. 1, 2, 3. Went higher than I thought we would. We might need to fill this gap. So this is on the downside. This is one thing to watch, is we might need to fill this gap over here. This is where Buffett announced they were going to buy, and this thing ripped up. And then Trump stepping in, causing it. If you believe in causation, the chart was already there. We came up, hit the daily resistance, The writing was on the wall. We were going to do a retrace. What's the reason? The reasons don't matter. That's the crazy thing here. Reasons don't matter, but the chart does. Now, if we can hold that low, like I said, we may have to gap fill. The next upside target here, that low, that high, this low. We'd be looking at right up in here. This is potential bullish, very bullish setup here. And we need to break through. Well, I already have the orange box there. We got to break through this stuff to get there. So, potential leap buying opportunity on UNH. or share buying. Now, if it doesn't hold, if we get below the gap fill with like a daily close, there's potential we make a lower low. So that's still out there. Humana, down in sympathy. Oh, well, yeah, I thought that one. I didn't think that one was done on the downside. Probably going to push on new low. This didn't look like a reversal. It was too sloppy. And it needed continuation lower. So this may come on down Humana before we find a bottom here. So couldn't manage the break up higher. So that's probably coming on down. New low. ROP. Ouch. Wow. Guess that one's not going higher. Hey, 5 p.m. this evening, 5 p.m. Eastern. I do a request show. If you want me to review your charts, come hang out with me. 5 p.m. Eastern. It's open for all. Do it. I call it 30 minutes awesome. I'll probably hang out for at least an hour. Then usually I do an Ask Me Anything for channel members after that. Ubiquity. I have a lot of Ubiquity equipment, but this looks like we're about to break down. NOC. Hit the target. Watch out for the retrace. Elevance. That's a 3-wave up. I don't know if it's done or not yet or not. That might push down to a lower low. That did. Whew. Bringing that one back down. Commvault Systems, BNAI. Wow. That was a bounce. Reddit, caution. Broke below the roadmap line. If we don't take this right back, probably coming down here. We did set up the upside target, but it looks like that one might fail. Sanmina Corporation, probably coming back for the roadmap line. Molina. That one's not really moving much on all this healthcare shakeout. CVS, back to the roadmap line. Oh, that's beautiful. CVS setting up for bigger targets up here. I used it for the original roadmap line masterclass. And 130. LMT. Watch out for the retrace here. Bro. Brown and Brown. No bottom in sight yet. PPLT. Getting a little step back, but we tagged that next fib line, so be careful on that one. 260. Anybody got it? Hopefully you close it. 270 being the next upside there, and then maybe 400. Getting a little crazy. How? Probably the better opportunity here. We did get the weekly close above the 618, daily close above the 618. 2 steps back gives you an opportunity to add, 364 will be the target up here. BA might take a step back to the roadmap line again, but set for bigger upside targets. Polaris, roadmap line. Let's see, CNC, roadmap line. So if this one, that's a new trend, retrace. If we can hold the bounce here, potential for 48, not big, but XLV, watch for that to come back down. Upside may not be done on XLV. It could go on up to 164, 169. It's a healthcare ETF. Could just be resting for a day or few, and then we're ripping again. USGG, 2x leverage on USAR. USAR getting hit in the face again. That one could be played out for now. Be careful. It's a dangerous pattern right there. I could take another step back. All right, stuff with setups for today. We had AB. That already hit the target, looks like. Yep. Entry and target all in one. McDonald's. This has been in it from way back over here. Here's the new high. I'm going for a high way on up here, like 370 right now. I think we can do a big extension, but here's the high, here's the low, here's the entry, and 325 is the target. SNN, and not fond of this, but here's the high, here's the low. Target is only 34. Little baby bounce target right there. Just a little baby move. 34 target. STNE. Here's the high, here's the low. And, well, the system picked up that high and that low. Python, I would go for this bigger move. Wait for it right there, 20. And this algorithm's probably not going to take it because that correction took too long. So more likely to fail than it is to go higher or take a really long time. UNG, that's lower highs, downtrend, wouldn't touch it. VAL, there's the high, there's the low, entry, 64, target up there. And no historical on that one. And another bounce. This one kicked off a bounce back here. Worked out. Little volatility. Here's the high. Here's the low. New entry, 2186. Not the greatest numbers. So out of these, McDonald's has the best history and best numbers. And they're not even spectacular, but 43, 80, 1.6. I'm already in McDonald's, so already in it, looking for higher. My target's up at 370, but if you just want to ride this, 325 is the target. Now, as far as today goes, what's the expectation? Jumping back over here. Take a look at SPY. See if we can read the tea leaves in the gamma market and then extract that out to what we expect from the bigger markets. So yesterday we hung in the gamma zone as identified, kind of crept up all day. Got a little bit of selling right at the end of the day. That blue line is where I expected to pin, and well, I got pretty darn close. So let's move this over for today. See what we can do. Jumping over, grabbing the bullflow.io gex map. SPY. If you want to get a bullflow.io account, links in the description. I'll make a couple bucks if you click it. Just affiliated. It's just affiliate link. I use the tool. Super handy. Looks like 701 on the upside and 689 on the downside. So that's going to be the range. 701 to 689. So this comes on up. 701. $689 on the downside. Bring this on up. So it looks like we got some up pressure here in the markets. See if we can pick a level where we might kind of hang out and pin today based on the levels charts. So a lot of people jump in here and look at the biggest call level or biggest put level and try to make a determination, or where the big set of options is, but that's not necessarily the way I view it. I kind of look at the balance. Now, doing the calculation in my head is difficult. We're getting more skew to the call side, so the calls are getting bigger. That means you can be a little bit into the puts and screw more calls than you can be in higher into the calls and screw more puts. So this, and when I say skew, kind of look at there's 1.4 million or 1.4 billion puts, 2.8 million calls. right there. So, but this doesn't come all the way up there, but this side does. So this side 2.1 really, and that side 1.4. So that's the call skew I was talking about. More calls. So really, if we hung out at, looks like around 694, would screw the most calls. But at the same time, I guess most of them are sitting on today. We got another chunk of them out to this Friday. So 694 would screw the most, but I don't know. Feels like we got some upside potential here. So may not stray too far from 694, but if we start ripping, we're going to start ripping. Let's go 695 since the big level calls is right there on 695. So that may be where we hang out today. By the end of the day. So we could come up here and then come back down here. Now, the map can change. It doesn't have to hang out here, but that would be basically screwing these calls right there. Making them go out for 0, basically. Market just likes to do that. Looking at QQQ, arguably more important for my beer money trade. Different map, different, like, look at this is much more balanced for between today and Friday. So more difficult to tell where the pin is here. I would venture somewhere around 629 though. So let's go take a look at that. QQQ. I don't think I drew the pin yesterday. Let's draw it on here today, 629. That's where it looks like we might end the day. Pull this over. All right, get the heat map. For Qs, oh yeah, look at that. There's not nearly the big levels that we have on SPY. We've got potential down to 628. This is interesting because the bubble is forming out here to Friday with upside bias out to 638 by Friday. So 638 is going to be the top right now. That's big upside pressure. And then the bottom of that's down at 628 right now. Just brought this, I'm going to go 627. So we can poke a little bit below 628 and is what I've seen on this. I call it a bubble, the big levels. Where's the big levels? I call it a bubble. We usually tend to hang out with the big levels. There is a larger level down here, but we'd have to jump the gap through there. Now, if we start down in price, it'll probably fill in. But right now, this heat map is showing that we're going to hang out right in here between now and Friday. So we got upward pressure on Qs. Despite the FOMC meeting tomorrow, there's not a lot of option players for tomorrow. And go back to SPY really quickly. And we don't have that map is not the same on SPY. SPY, it looks like we could drift a little bit higher, but looks like we're kind of capped in by 700, 701. Now, there are some bigger levels down here in SPY. So that may mean some opportunity for a dip. But out here to Friday, there's just not much. Ooh, 400 million down there. Another 400 million. So SPY pricing in some downside while S&P doesn't necessarily have big up levels. Now, why would, the question, why wouldn't I look at the indexes was asked before. SPX doesn't have the daily options on here. They just have the monthly. And then NASDAQ doesn't even have options on here. So look at the options. The indexes doesn't give me any map for. So I kind of have to use these more liquid day trading tickers, these ETFs for these indexes, and kind of extrapolate that out. Now, that 636, 637, 638 upside that I've got on there. Pull this over. The rough ratio for QQQ to NASDAQ, 41.11. So times 637, 638. So basically 26 to 28 would be the upside. So 26 to 28. And then the downside, we were saying 627. Clear 627 times 41.11. That gives 25. 775 on the downside. Yeah, right there it is. So that's the rough range for Qs today in NASDAQ. That's basically the NASDAQ prices. If you didn't know, you can make a approximate index there. And just to kind of show you that works, bring up a live quote right here. See 25, 936, 25, 934, far up 935. So pretty darn close right there with that 41.11 on QQQ to a live price. I do that because my NASDAQ data is delayed and I'm not paying for NASDAQ data. When we look at it, it's got this little orange D up here, delayed data. So that's a hack to get live market data there. QQQ times 41.11. Now it doesn't always stay 41.11. So you got to be careful. You do NASDAQ divided by QQQ, and this gives you the rough number between them. Hopefully that was helpful. Hopefully the prediction's helpful. I'll be back at 5 p.m. Eastern. I'll be back on Market Masters in about an hour with Jack. If you want to come hang out, links in the description. Otherwise, set your reminder. We'll see you later.